Thank you for joining us today for this TBR Insights Live session. The topic for today is IT infrastructure strategy and purchasing trends in the post-pandemic era. So we can jump to the next slide. So about a month ago, we curated a report called IT Infrastructure Strategy Customer Research, which was based off a survey we conducted to investigate things like the composition of infrastructure inside customer data centers and investigating what they're doing, either building out their data centers or consolidating in some cases, what factors customers evaluate and prioritize when they're planning to purchase infrastructure, and what are customers thinking about in regards to their near and midterm IT transformation goals. And so we wanted to share some of those insights that were concluded from this research. As such, the agenda for today will be post-pandemic IT infrastructure buyers, top buyer priorities, and planning for the future. You can jump to the next one. Before we jump into it, we wanted to introduce ourselves. My name is Jacob Fong. I'm an analyst in the IT infrastructure practice here at TBR. My primary coverage includes the infrastructure businesses of OEMs such as Dell, HP, Lenovo, and IBM, with other coverage being focused around areas of vendor and technology evolution such as hardware as a service and quantum computing. And I'm here joined with my tremendous colleague, Angela Lambert, but I'll let you introduce yourself.
Thanks, Jacob, and hi, everyone. This is Angela Lambert speaking. I'm a principal analyst, also focused on the IT infrastructure space. So I'm working with Jacob on evaluating the kind of major overarching market shifts specific to IT infrastructure and kind of all the vendors surrounding that ecosystem.
Okay, let's go to slide 4. To set the stage, we wanted to give a little bit of background on the survey. The survey included the responses from 300 IT infrastructure purchase decision makers, such as CIOs, CTOs, IT directors, and IT managers. Among these respondents, we had roughly 50 respondents per the 6 industry verticals, and as well as about 100 apiece from small, medium, and enterprise businesses. With that, I'll turn it over to Angela.
Thanks, Jacob. So I'm going to get us started on the content discussion today and go through the first agenda item, which is the post-pandemic trends we're seeing in the market based on the direct feedback we've gotten from IT infrastructure purchasers who completed our survey late spring. So I'll talk about kind of 3 survey data trends comparing where we saw IT infrastructure buyers last year compared to where they are today. The kind of 3 topics I'll cover will be changes to supply challenges and seeing those waning, an increase in budget concerns, and the fact that we're seeing public cloud not always being the default choice for IT infrastructure leaders. So let's jump on in and take a look at some of these trends and the kind of some of the data supporting those. So starting out with supply challenges waning, this one's obviously not a huge surprise to us and anyone in the industry. We see reports from all vendors that demand for IT infrastructure like servers and storage has decelerated in the enterprise and SMB space over the last few quarters, and company performances have certainly reflected that. But we also want to take a look at that from the customer perspective and see where they stand in terms of their acquisition and purchasing of infrastructure. So compared to 2022, as the pandemic was still somewhat of a factor, and there was certainly quite a bit of backlog at this time last year in the market. We saw that as a challenge, component and hardware shortages has really shifted in the customer mindset. So last year at this time, it was the third highest challenge they were dealing with from the list of challenges that we surveyed on. It's now in last place, 7th in terms of the challenges that customers are dealing with right now. So it went from being really one of the top of mind issues for customers to really kind of falling off the radar, so to speak, over the course of 12 months. That being said, the survey respondents we talked to, this was definitely an impactful trend for them overall. 85% of the IT infrastructure purchasers we spoke with had some type of difficulty and had to adjust their business strategy to some extent to deal with limited supply of the IT infrastructure they needed for their business. So how was that addressed? Increasing use of SaaS and public cloud was the most common. However, we also saw just kind of adapting and doing the best with what customers had being kind of the next most common thing. So placing orders further in advance, changing those purchasing behaviors to buy more in bulk to account for those long delivery times, and also just really hanging on to the older infrastructure longer than customers planned to. Ultimately, we didn't see that these challenges had too much of a negative impact on delaying projects, but it did really change the buyer behavior. And I think today the question is, what has the buyer behavior shifted to now? And is it really just gone back to kind of the pre-pandemic normal? So I think the answer to that is mostly yes. And we will look at a little bit more data on that in the coming slides in terms of how perceptions of using public cloud versus using companies' own IT infrastructure on premises has shifted a little bit. So next trend we wanted to evaluate on the survey data would be budget concerns. Overall, we think that the budget concern has absolutely increased in terms of the IT infrastructure purchaser sentiment. However, we think it's still relatively moderate. Certainly not a kind of panic or huge issue for customers at the moment. However, we saw that this was the lowest rated challenge, obtaining IT funds in 2022. In 2023, obtaining IT funds moved up from being the lowest on the list to being the third most important. So really what we see here is actually a flip-flop with last year's supply challenges was that kind of higher concern. It was in last place. Now we see the budget concerns taking that spot where supply challenges were. Well, supply challenges are now in last place. So if we think back to a year ago, government funding helping with that urgent need for companies to transform digitally. Also, companies just opening their own wallets for spending on technology solutions. That has certainly shifted this year in terms of just the urgent need to spend having subsided, the concerns of the recession and slowing spend due to inflation playing a role currently as well. Also, as we saw on the previous slide, customers were purchasing much more infrastructure farther in advance than they typically do with shifted buyer behavior. So we see now that many of these customers have stockpiled to some degree levels of IT equipment due to the shortages and procurement delays. And now ultimately they're going to be working through that before they're purchasing more infrastructure. But overall, despite the purchasers we surveyed having some concerns on the ability to obtain funding for their IT infrastructure purchases, when you look at on the right-hand side at the concerns on IT spending and whether that's shifting spend on any specific hardware areas, in most cases, a lot of the customers expect spending to more or less stay the same. So you have in many of the infrastructure categories like server storage, HCI, data center networking, at least half of respondents saying that that budget's going to essentially be flat, and a fair amount of spending still increasing in these categories as well. You don't see a particularly large percentage of respondents saying that they're going to have to reduce their spending in these areas. So while they may not be seeing some of the budget increases they've seen in the past, we also don't see a significant shift towards respondents indicating they're going to reduce spending across the board in all of these infrastructure areas. Third trend we wanted to talk about in terms of how the pandemic has changed the customer behavior in our own primary research is looking at public cloud. In general, we have seen over the last several years, public cloud being the default choice in terms of new projects, new workload placements. We're going to try to find a SaaS or public cloud solution to meet this new project need, and that's essentially our company mandate. That sentiment has changed towards a cloud smart strategy in 2023, where we see more respondents indicating that they are going to evaluate on a case-by-case basis where they're going to place a workload. So you see 51% are evaluating each new project and considering where that's going to be placed, and not necessarily choosing public cloud or SaaS as a default. They're evaluating what makes the most sense to keep in their own on-premises infrastructure as well. We saw an increase in the percentage of respondents who are repatriating workloads from public cloud onto their own IT infrastructure. So last year, there was still a fairly significant amount of enterprises and SMBs who have shifted some workloads back at 58%, but we see that continuing to increase in 2023, with 66% of our respondents having done some degree of moving workloads that were in a public cloud environment back to their own environments. And another thing that we see is data center consolidation. In previous surveys, that has been an area where many respondents say we're on a journey to consolidate our data centers as much as we possibly can. We see that a number of respondents are actually kind of nearing the end of that journey. In the past, you would see that more respondents would say that they might be 5 or 7 years out from finishing up with their kind of consolidation objectives. Now we see that 60% of the organizations we surveyed expect to have their data center consolidation goals met in the next 2 years, which indicates to us that they have gotten closer to a steady state of understanding which workloads will be shifted to public cloud or SaaS or another option, and what's going to be staying in their own environments, and kind of balancing their infrastructure in according to that strategy. I think one of the most interesting trends we see on the right-hand side here is comparing the use of IT resources looking forward in the next 2 years. So in 2022, we had 38% of respondents indicating that they're going to increase usage of their centralized data centers. That was actually up to 47% this year. So more customers thinking about how they can use their own infrastructure, and not just use SaaS and public cloud. And while public cloud and SaaS is still obviously, we have no illusions that that market will not continue to grow steadily. You actually see a deceleration in the growth from the respondents we spoke with. So in 2022, 72% of respondents we spoke with indicated they were going to be increasing their usage of public cloud and software as a service compared to 64% in 2023. So this is just kind of an interesting illustration of the shift in mindset where obviously the investment in public cloud and SaaS is continuing as we expect it to, but at the same time, there's more of a balanced perspective where there's also increased plan and expectation to utilize on-premises infrastructure as well. So that is absolutely kind of a new and adjusted mindset in terms of how purchase behaviors likely to shift post-pandemic. I think this is a really big one. So yes, we think ultimately once customers work through their budget concerns and their the excess inventory they may have already purchased in the last couple of years for infrastructure, we do think they'll return to more of a normal buying cycle, but also these underlying trends around optimizing the workload placement are going to play a role as well. So with that, I'm going to pass it back to Jacob to talk about our next agenda item.
Thanks, Angela. So our research shows that the IT department is viewed as an innovation center, which say that a high proportion of IT organizations believe that innovation is important, yet the priorities for IT organizations over the next 2 years still remain very focused on shoring up the fundamental operational objectives, which are keeping systems secure and improving reliability. So 90% of IT organizations agree that they're highly focused on innovation, but 71% also agree that they're spending most of their time trying to keep up with day-to-day tasks. And that large overlap makes it difficult for IT organizations to allocate time towards strategizing and executing the innovation that they seek. So we think these factors are impacting trends, and the survey highlighted that customers have a strong desire to automate IT tasks as it moved up from the 7th most common priority only a year ago to the 3rd most common priority when we conducted the survey this year. So this in turn is influencing vendor activity, although AI offerings are nothing new for IT vendors, as they've offered AI integrated offerings and AI focused offerings like AI Ops. In response to the AI hype in the public eye, vendors are increasing their AI-based marketing needs or marketing messaging. And respondents' feedback also shows that staffing shortages are playing a big role in prioritization, which we'll reinforce on following slides. Maintaining adequate IT staff is a challenge or significant challenge for about 60% of the organizations that we surveyed. We can jump to the next slide. So based on the IT infrastructure priorities and challenges we discussed, IT organizations are ultimately looking to use services to help offload operational burdens and to get to a state of increased automation. After analyzing open responses in the survey, a few overarching trends came up, which were security, AI, and staffing. It should be noted that from a company size perspective, small businesses were by far the most likely to view hiring as a priority, as 34% of respondents viewed hiring as a priority compared to 25% overall. Next slide, please. Now, let's look at where there are services opportunities for IT infrastructure related activities. Based on these two graphs, the first one is asking what data center activities customers are doing themselves, partially outsourcing or fully outsourcing. And the second graph is about what services and features are most valuable to them. And so what are the big takeaways from this data? The first thing to note is that one-time activities geared towards the beginning or end of infrastructure life cycles tend to be offloaded most frequently to service providers, things like installation and decommissioning. Um, and the services that are more operationally ongoing, such as performance monitoring and backup and recovery, are most likely to be done in-house by customers. The exception to that being security monitoring, which we believe is really being caused by organizations just lacking the resources and skills to adequately monitor security threats in-house. Over time, we believe that infrastructure monitoring and backup and recovery, the two areas that are most often done in-house, are going to represent a big opportunity for managed services providers because the staff just need more air cover. Looking at the second graph on infrastructure service features, we see the top ranked features in terms of value aligned to the points discussed, and threat monitoring and response, as discussed, is likely reflective of a resource and skills gap from customers. Performance optimization, backup services are the second and third most valuable features viewed by customers, and we believe that this is really driven by the need for automation and or outsourcing of things that are often done in-house today. And with that, unless Angela, you have anything else to add, we can jump into the Q&A portion of the session.
No, I think that covers it. So we can jump to Q&A. It looks like we have a couple of questions, but if any additional questions are coming up, feel free to all of our audience, feel free to add additional questions in the chat as we go. Jacob, do you want to read out the questions we have so far?
Yeah, absolutely. So regarding the slide on public cloud and on-premise usage changes, do you have any data on how edge environments are being adopted?
Sure, and we can jump back to that slide just as a reference point. So here we were looking at how the changes in data center and public cloud and SaaS have looked over the last year or so. When we look at edge environments, we have seen that the response was somewhat similar to what we saw in centralized data centers. So almost half of the respondents indicating that they're going to increase their investments in IT infrastructure at either edge sites, branch offices, or retail sites. So certainly a continued focus there. In particular, from the respondents that we surveyed, as you saw earlier, there's kind of a handful of different verticals we focused on. The healthcare and financial services industries tended to be a little more apt to be increasing their edge investment currently, and looking at all of those branch offices in particular. We saw security, surveillance, real-time analytics all being some common use cases across all the industries. But I'd also note that, aside from those verticals, we saw that in general, we see retail kind of continuing to invest on that front as well. So yes, overall, there's definitely still a continued increase in putting IT infrastructure, not just in the centralized data centers, but also in those edge environments as well.
Awesome.
Anything you want to add on that one, or?
No.
Okay.
You can just jump into the second question here. What were some notable industry vertical differences?
So we as I just kind of mentioned on the edge front, so that would be one area I think we see some vertical differences where healthcare and financial services were a little more aggressive on increasing their investment. A couple of others I would probably call out. So I think the retail industry is a bit of a question mark, just given some of the concerns of potential recession. We do see the retail vertical still investing in IT infrastructure for edge, despite any potential economic concern. On the financial services side, that vertical really stands out in terms of their desire for automation, and also just the need for some really kind of heavy duty solutions, and doing more on-prem than some of the other industry verticals are. They're doing more with high performance computing and storage footprints. They're more likely to be doing machine learning on their infrastructure. Probably to contrast financial services, I would say public sectors where we saw some of the more just kind of basic struggles with ability to innovate, very concerned with security, having a lot of modernizing challenges with their legacy apps still being kind of at the forefront of their objectives, and just kind of overall slow to migrate those apps and modernize. So I think that probably covers it for some of the major vertical differences I saw.
Okay, we have another question here. When looking towards AI-based threats, do you have more information on generative AI trends and threats if we want to know more?
So from this survey specifically, I would say, we saw some open responses from individuals in the survey talking about their concerns of AI-based security threats. There's some info there just in terms of how customers are concerned. The overall TBR research base in terms of our professional services analysts, as well as our cloud analysts, are also kind of looking at Gen AI trends, and of our TBR's one of our newer products this year, Security Professional Services Market Landscape, I think is going to be looking at that as well. So I would say from a customer research angle, not super specific on the Gen AI threats category, but in TBR's overarching portfolio, yes, we're absolutely looking at Gen AI as from kind of both the security threat standpoint, as well as how the customers are ultimately hoping to leverage Gen AI from a productive or positive standpoint. Anything else from you, Jacob, on that one?
Well, I'll say, yeah, there wasn't anything super specific on this year's survey on Gen AI threats, but this obviously we like to keep a lot of the questions year to year consistent to kind of benchmark changes in over time. But we also do allocate some flexibility to integrate some questions on more recent trends. So this may be an area that we investigate next year. But yeah, I think overall, like this particular survey did not cover very much on that, but we definitely have some coverage over at maybe our software and professional services teams. So. Okay, so we have one more question here. I know we're at the top of the hour, but what is being repatriated to customer data centers?
Okay, so I think that goes back to some of the public cloud discussion we were having earlier. So when it comes to the repatriation, there's probably no single answer in terms of a specific workload. It's absolutely varied, just given the huge variety of workloads that are in a public cloud being varied. But I would say the most common would be database, business apps, analytics, and general storage came up fairly often. One other question we tend to get in terms of repatriation is, why? Like, what's the driver for IT organizations to actually do this? the general market narrative is currently that customers want to better control the costs, which is absolutely true. However, a couple of other reasons that also came up in the survey were, security reasons, just greater control of IT assets, and also making use of excess capacity on companies' own infrastructure was another reason that came up, recently in terms of other reasons that that customers are repatriating workloads.